think the general tone has certainly shifted from where we ended 2023, at least at the early stages. Happy New Year. We have a short week to start 2024, but there is definitely so far a change in the tone in the markets here to kick off the new year. My name is Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. We, again, have a bit of a shorter week in trading to start 2024, but there is a lot going on, so we'll make sure to jump into that. We also now will get back into our question of the week, which is a really good one, really asking about the impacts of working in retirement. So we'll talk a little bit about, more about that as we wrap up. Although we do have a shorter week here to start the new year, there is a lot going on, and I think the general tone has certainly shifted from where we ended 2023, at least at the early stages. We start this week with a lot of jobs data. This is jobs week, so we have a lot coming out. And the reality is that's actually been pretty strong, which I'll talk about here in a minute. However, we've seen the markets pull back quite a bit here in the first few days of trading, and especially the tech space has pulled back quite a bit to start 2024. Now, we are 3 days in, so bear with me a little bit. This by no means is a sign of what the year will bring, but certainly a shift in tone, which I think is kind of to be expected, to be honest with you. We had a lot of euphoria, a lot of optimism going into the end of 2023, and that has certainly shifted a bit here to kickstart the new year. Let's talk a little bit about jobs, though. So this week is all about jobs and kind of kickstarting earnings as well. But we had the JOLTS data come out on Wednesday, basically suggested that there were just over 8.7 million job openings. I think it was 8.79 was the exact number. So 8.79 million job openings. We also had ADP employment report come out today, which suggested that 164,000 jobs were added for the month of December, which is, much higher than expected. And all the while, initial jobless claims came down as well. So we had today in the jobs market world, certainly some really strong data suggesting that jobs are still being added at a great clip. And, initial jobless claims are coming down along with it. On top of all this, if we go back to yesterday on Wednesday, we also had the Fed minutes come out. There's not a whole lot to digest here, except that it's suggested basically what we've been talking about. The Fed minutes certainly suggested they plan to keep rates higher for longer. They don't have plans to cut anytime soon. Obviously, we will see how that unfolds now that we are officially into 2024. But nonetheless, not a whole lot to break apart there. Really, the focus this week is all about jobs and what is going on in the tech space specifically, but the markets to start 2024. Coming up next week, though, be sure to tune in next Thursday. Obviously, we will be back at 3 p.m. and we're going to talk about the non-farm payrolls number that comes out tomorrow. This is the biggest jobs number to watch, so the timing of our weekly updates kind of splits up our jobs week a little bit, but next week we'll talk about non-farm payrolls. And if we see a big number there, like we saw in the ADP and the initial jobless claims come out, it's really showing that the jobs market remains to be strong. How long that lasts, who knows, because it certainly has continued to be a sign of strength here in the economy. And then we also get inflation data next Thursday. So next Thursday, we're going to be talking about jobs and inflation, which are very important as we look ahead into 2024. Before we break here this week, though, I do want to touch on a great question of the week from Greg. And the question of the week is basically the high-level version of what are some things to consider when working in retirement. And this is something we actually talk a lot about, I think, in today's world especially. The focus of, or this idea of, working to 65 and then retiring entirely is not quite what it used to be. Some people still do that. There's nothing wrong with that, or working in retirement. But I think a lot more people are working in some way, shape, or form in retirement, whether it's, just some part-time work, whether it's just continuing to work because they enjoy it. We see a lot more of that lately, but there are some impacts. And some of the biggest ones are around Social Security. So number one is that it's important to know if you work in retirement and you make too much money, it's a very low barrier, by the way. Basically, the Social Security benefits are actually reduced depending on when you take them. So if you take Social Security before full retirement age and you have working income above a certain threshold, which again is very low, they will actually deduct $1 for every $2 of Social Security benefits you earned above that limit. And again, this is if you're under full retirement age. The year that you reach full retirement age, they actually deduct $1 for every three that you've earned. But it's very important to know that after full retirement age, most it might be 67, but let's just say full retirement age, you can earn as much as you'd like. They're not going to deduct those benefits at that point. The second item is still around Social Security, which is that Social Security is also taxed. Now, a lot of our clients find themselves in this position anyway, regardless of employment income, because the income thresholds are, relatively low on this. But if you make over a certain amount, including some of your Social Security benefits, you'll find that that benefit is taxed to you. It could be 50 or 85% of that benefit is taxed. Doesn't mean taxed at 50 or 85%, but that 50% of your Social Security benefit or 85% of your Social Security benefit could be considered ordinary income for that year. The third is around Medicare. So if you make above certain thresholds, which are a little higher, there are some impacts to Medicare earnings as well, or Medicare premiums as well. So basically, if you cross these certain thresholds, you could see your Medicare premiums go up. And it may not be a big deal while you're working, if you're working in a capacity that does provide health insurance. However, if and when you do stop working, they have a 2-year look back on this. So it could still create some challenges for you even after, after you've been in Medicare for a while on the base plan anyway. The last that I'll touch on, which might be a bit of a benefit, but depending on your 401k plan and how things are set up and all that, you may also be able to delay required minimum distributions. So one of the things that comes up is once we hit certain ages, let's just say 72 to keep it easy for now, the IRS makes us take money out of our retirement plans, out of our 401ks and IRAs, because they had never been taxed and, they would like to see some tax dollars. So that can be delayed if you're working during those years sometimes. So that is important to note as well. But I hope that was helpful. Really good question here. I think especially to start the year, a lot of people may be thinking about retirement as they move into the new year, and hopefully that gives you kind of an idea of some things to consider. Thanks as always for joining us. We'll be sure to kind of catch up here next Thursday as well. So be sure to tune in next Thursday at 3, where we'll talk about jobs again, but also tie in the inflation numbers that we get next week. Have a great upcoming weekend. We'll see you next Thursday at 3.